limited partnership and a foreign bank are on the value pick list this week. Tracey Ryniec, value stock strategist, here to tell us more about them. Actually, that limited partnership is a master limited partnership, right? Calumet Specialty Products Partners?
Yes. I know we've talked about this one before.
Sounds familiar.
I couldn't remember. I'm like, how long ago was it the last time we talked about it? But I've been talking a lot about the refiners recently, so they're all kind of mixing together.
Jumbled in your head.
Yes. That's what these guys are. Also a refiner. They make specialty products like waxes, asphalt, and then they make the fuels, jet fuel, diesel, gasoline. They're kind of interesting because they're a little more diverse than some of the other refiners because they have exposure all the way from the Bakken down to the Gulf. So if one thing is going good and the other thing isn't, they kind of can feed off each other. They did announce not that long ago that they were entering into a joint venture with another company to build a $300 million diesel refinery up in the Bakken. So that is a big deal for them. That's a lot of money for this size company to spend. And then they have a couple other interesting things. Just a couple days ago, they announced a new public offering of about little over 5 million shares, and it's probably going to raise nearly $200 million. So that's a lot of money that they claim is going towards just like general expenses, acquisitions, other things. But with the stock trading, as hot as it's been, why not cash in a little bit of it and make sure they got some cash on hand? The refining business is really heavy. It takes a lot of cash to run it, obviously. To build a refinery, to maintain them, these are all pretty cash intensive.
Sure.
But it is a master limited partnership. Analysts aren't quite sure what's going to happen in 2013. I know I've said this with the other refiners too. You can see they're expecting a 15% earnings decline this year because no one knows what's going to happen with these crude spreads. And that's what is really fueling their big profits in the last year to 2 years. And they all expect it to narrow. It hasn't done it yet, so things still look good. But they do expect it to. But they're being pretty conservative on the estimates to account for that possibility.
Makes sense.
Yeah. But, shares, like I said, very, very hot. You can see all the refiners have been. It's at 2-year highs, but it's only trading about 13 times, so not super expensive. You do get the big dividend because they're a master limited partnership. They pay out almost all their earnings to the unit holders. And it's yielding about 6.7% right now. That can change from quarter to quarter depending on what's going on with the crude spreads and, kind of cash they're taking in. But the last year or so, it's been very nice to be a shareholder in this kind of company.
Okay, and then I'm going to let you pronounce the name of the bank. I'll just say that the ticker is IBN.
I think it's ICICI, but don't quote me on that
sounds
either.
Okay to me.
But they are India's second largest bank. They have about $93 billion in assets, so they're pretty huge. They're one of the biggest private banks over there. They do have branches and other things in about 19 countries, so they're not just completely India-centric, but it's mainly India-centric.
Okay.
They make most of their money off the domestic business, loans, and they've been increasing their retail base, which is a good sign. Last quarter and the third quarter in January, they announced that they had increased the retail base about 17%. So, this is good. They have a pretty good return on equity, which is what you look for a bank. You want it to be over 10, and they were a little over 10 last year, and they're expected to be a little over 11 this year, so that's a good sign. They do pay a dividend, slight dividend. It's like 1.4%, so you do get something for holding this one.
Okay.
Estimates, a little weird in the Zacks universe because it's a foreign bank. There's not a lot of analysts who cover it, so usually you just see the yearly estimates, which is what I put up here. They're expected to grow earnings about 14% this year, which is pretty solid for a bank of this size. Estimates going up. That's why it's got the Zacks #1 rank. A lot is going to depend on what the Central Bank of India does too with rates and all that stuff is just like our banks, all interrelated. But for right now, analysts like the position that they're in. You can see the chart. I put up the 5-year because it did get decimated along with everything else, even though they didn't have the mortgage issue at all back in 2008, 2009. But nobody cares because the banks were all sold off. Had a big rally into 2010, pulled back. It's rallied again recently. But it's not back to the 5-year highs yet, and it's trading with the PE about a little over 14. Has a price to book that's pretty attractive of 1.8. You look for under 2 with the banks. So, as banking go, and if you're looking for something in one of the BRICS, it's hard to find individual stocks in India.
Yeah.
You might want to look at the financials.
Okay. Do you own either of these?
I actually do own both of them.
Look at you.
I know. And I own Calumet Specialty in the Value Investor as well.
All right. In the interest of disclosure, we have to ask that question. And in the interest of getting you more pick opportunities, choices, and stock picking strategy choices, we invite you to go to Zacks.com because that's where we keep them all. You can link to them right off the homepage if you're not already there watching this video. With Tracey, I'm Terry Ruffalo.